Good evening, ladies and gentlemen. Welcome back to our weekly market analysis session. This is analysis for week 10, I suppose, 2025. We're starting with dollar index monthly time frame. I'm going to start with the monthly time frame because the first week of the month of March is behind us, seeing the non-farm payroll happened on Friday. And then our analysis, our anticipation, where we expected price to get to, it has been met. I told us that I want to see a movement into this level. In March, I told us when we're in February that I want to see movement into this area in March, this FVG. It has closed below it, but we're still very fresh in the month of March. So I think that this is just, it's going to turn to a wick, the tail or the wick of a candle. That's what this is going to do. It's going to rally up again. Another point of call could be inside here. It might not be that much. We have of the opinion that we're going to maybe take out this low, that's November low. We'll take it out and then just poke a little into the FVG of October, just a little into it, and then we'll rally up. I don't want to see it, feel this completely, no. Since it has gotten to this point, we could just wick through this and then rally up. Now, looking at it again from the monthly perspective, these are other blocks. These last 3 consecutive down close candles are the other blocks. So prices has traded above the other block, validating it as an order block. Okay, so we've seen a retracement into it. I want to see it respects the mean threshold of this order block. Let's measure it, and then the bodies of the candles, the low, bodies of the candles. So essentially that area, look at it there. Let me zoom in. You can see the low is relatively close to the equilibrium level of the order block. So my anticipation, what I expect price may likely do, it would wick through it, but the body should not close below this 50%, okay? It could wick through it and then rally up. That's why I'm of the opinion that it might take out this low. It could take out this low, dip into discount before it rallies up. This is just a deep retracement for a higher movement. Now, considering what has been happening in the US, how stock market has been crashing lately and all that, by right, dollar should rally. If stock market is going down, dollar should rally. But unfortunately, we are seeing a decline in dollar and a decline on stock market. So we have the market is in a territory where it is not symmetrical. Everything is just not in order the way it should be. So I'm of the opinion that technically speaking, it could just wick through this, take out this low, and then that would be the last line of defense for the bulls, okay? If this wants to go up, the lowest point of fall, you should take out this low, and then you shouldn't waste time inside this FVG, take out this low, and then starts rallying higher. So if we could see a week, a long week, trade above all this, close somewhere around this area. Okay, that's what I'm looking at. Okay, so, but if we keep going lower and then disrespect the 50% of this FVG on this other block on monthly time frame, then I think we have changed direction from bullishness to bearishness. Okay, but from what I'm seeing, I am of the opinion that if you take out that low or the November low, and then we'll start going higher. The reason is because we have this high to contend with. This was a deep movement up to this point, consolidate around this high, broke structure to the upside. So the next point of call will be to rally higher. We have a lot of upside objective to tackle. Buy-side liquidity here has been pushed multiple times, broke structure here, came back, tested it, here took out this high. It has broken up again. So the next one of call is to take out that high. So essentially, long-term perspective, we are bullish, okay? So this could be just a minor retracement, and then we'll see an expansion to the upside. So that is what I am looking at for the dollar. weekly time frame, we could see what happened non-farm payroll week. It rallied down, you know, close below that monthly FBG, and this is where we are. So this is the low I'm looking at. Break below this low and then rally. So something like a Monday, Tuesday decline for a bullishness for the rest of the week. That's what I'm looking at. Okay, that's what I'm looking at. We've had a very long impulsive candle. So I think this particular week, we might not have that momentum, that long candle, just as as we had last week. We could just have a little down into this low here, and then rally up a little, and then maybe next week we will see upshoot to the upside. That's what I'm looking at. So daily time frame, we had, it was just bearish all through Monday. This is Monday, Tuesday, Wednesday, Thursday. It kept going down, 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 down. It was all through bearish. They didn't even give any form of opportunity for retracement, for us to capture the move. It just kept going down. It was very heavy on the downside. Now we have relatively equal low. So what do you expect? I want to see a sweep below this and then a rally higher. That's what I want to see. Now, it could do something like this, make this, let people have this feeling that this could be a double bottom, and then this is support that is very strong to be broken and wants to rally higher. They could do that. They could trade up to this point and then start going lower, or it could just go straight down, take out this low, and start going lower. So we'll look at how it unfolds every single day, and I'll be able to make informed decision as to what price is going to do. But like I told us, long-term perspective, I want to see this low broken as it is right now, take out this low and then rally higher. That's what I'm looking at on for the dollar. Now we have shifted from daylight savings time to normal time. Okay, today rather, which is 9th, was the last day for daylight savings time. So we've transitioned into normal timing. Okay, where, what do you call it now? For Nigeria, we are in Nigeria. So for Nigeria, trading starts now from 10 p.m. Nigerian time or West African time. Before, during daylight savings time, it was 11 p.m. Now we've come back to 10 p.m. So every 10 p.m. markets will open as it is right now. This is 10:23. Market has already opened. You can see that small line here. That shows that that's a new trading day. Okay. So we've transitioned into the normal time outside daylight savings time. Okay. So that is about that. Okay. So I'm looking at this low violated this week and then a rally higher. That's what I'm looking at. Okay. It could do that on Monday. Just do that on Monday or Tuesday. Then we'll start rallying higher. So I'm bullish on the dollar after it has taken out this low. Once it's taken out this low, I'll be comfortable to trade bullishly on the dollar. Let's go to other assets. The fiber euro USD. You could see it broke above that monthly CB and has traded to a series of other blocks. Okay, we have a series of other blocks. It might not take out this high. Okay, it might not take out this high. It could do that. It may also not do that. It might not take out this high. Whatever we see dollar do, once the dollar takes out that low and this phase will take out this high, we are good to go. As long as dollar takes out that low, as long as dollar takes out that low, then I am good to go. So this is a deep retracement into premium for itself. Very short block here on monthly time frame. The mean threshold should not be violated. I want to see it stay heavy below the mean threshold and then same price lower. Let's measure the mean threshold and see what we have here. So I want to see this 50%. That's essentially where the high of this November candle is. So perhaps it could do that. It could sweep it, but it shouldn't close above it. That's my framework. If it closes above it, then we will resume our bullish movement of taking out this high. Okay, so let's continue on weekly time frame. What do we have? On weekly time frame, we had the impulsive movement to the upside, or the buy side liquidity into this inefficiency has been pushed. It has disrespected this other block here. So essentially, we take out that high and then rally lower. That's what I'm looking at. Remember, we are inside the monthly order block, okay? And the mean threshold is just here. The high of this candle, that's the mean threshold for the monthly order block. Daily time frame, we had movement to the upside Monday, Tuesday, Wednesday, Thursday. We had indecisive candle, something like an inverted hammer, and then Friday we broke above it. This is a new day, all right? The new week has started already, okay? Because at the time of the recording at the moment, it's already 10 past 10 Nigerian time, okay, which is past 5 p.m. New York time. So we can see here. Okay, so I want to see it. It could take out that high. We're essentially inside the FBG here. Let me mark out the FBG on daily time frame. We're essentially inside that FBG there, that bearish FBG, CB, and excuse me. So we had Thursday, traded into a rejected Friday, respected the mean threshold or the consequent encroachment, and we are below it. So if we stay below the consequent encroachment of this CB, then this high will be respected, right? So let's see how we trade around it Monday, Tuesday, okay? So, but essentially, whatever it does, even if it takes out that high, we are still bearish on the down. We are still bearish. This is just, like I said, a deep retracement. Okay, so that's it. And moreover, looking at all these, we've expanded higher. So I want to see a retracement that will turn to reversal. Essentially, that's what I'm looking at. A retracement that will eventually turn to reversal, taking out this low, and then we'll start going lower. That's what I'm looking at. So all our objectives have been met for the dollar and the fiber. So we expect it to consolidate a little and start reversing to the downside. Let's look at cable, monthly time frame. It has traded into that FBG. That's the FBG there. It has traded into that. It is on weekly time frame, I think. It's on weekly time frame. Let's look at it on weekly time frame. Yes. That's where we expect this inversion FBG. That's where we are essentially. So I think we are pretty done with what we want to see price do. So we should consolidate here and then send price lower. Daily time frame. Yes, we have other block here. Consolidate here. Volume imbalance feed completely. And then want to see price trade lower. I think this high should be respected. We shouldn't go beyond that. Even if it goes beyond that, let's measure how deep are we into the premium. Let's see. From the high to the low, sorry, excuse me, that's wrong of me. From the low to the high, do it that way. What am I doing? I did from the high to the low, and okay, good. But I was correct when I did high to the low. Okay, so the high to the low, we are into premium, 62% retracement. So even if it takes out this equal highs here, it's still okay. Okay, we are still good. That could be a deeper retracement into premium to send price lower. But if dollar just takes out that low, which is very easy for it to do, and then starts rallying higher, then this will consolidate here and then give up the ghost to start going lower. So our objective has been met as well. For cable, let's go to Aussie. Aussie, we are still inside the FBG. We can see how we respected the monthly CB. Weekly time frame, respected how many weeks now? 1, 2, 3, 4. 4 weeks. The whole of February into March, we've seen how it respected the CB, okay, on monthly time frame. Want to see it stay this way and then rally lower. Daily time frame, it was all, we had bullishness to the upside. Thursday made a reversal, and then we said going lower on this time, on these assets. So I want to see it maintain this level and then go lower. Even if it takes out that high, we're essentially inside this other block, which is still very much okay. But I think that it's going to respect this other block, this bearish other block, and then centralized lower. We have downside objective that has not been totally fulfilled. It just poked it through, but that was very shallow of it. So I want to see it, go down significantly to the downside. Let's go to our Kiwi, NZD, USD. That's the low I'm talking about. I want to see break low. We have 50% of this week. That's where I'm looking at price going to next. So on NZD, I respected the CB here. So the next point of call should be to take it down, clear these sales and liquidities on weekly, monthly time frame, take out this low, then we'll see if it's going to tag this other low here. That's about that weekly time frame. We had consolidation basically on this pair. Let's go to USD CAD loaning. Monthly time frame, we're still around this. I told us that this is relatively call highs and I want to see price take it higher. So just consolidation around this zone to send price higher. So the moment dollar resumes its bullish movement, it's going to give room for this pair to take price higher. Daily time frame, we had a decline Monday, Tuesday, Wednesday, Thursday. We had a reversal from there. Other block here. Want to start trading here. So we have expansion, retracement. Another leg of expansion is what I'm expecting for USD CAD. The next one is USD JPY monthly time frame. We are inside this BC here. Inside this BC here. So the next thing is to rally higher. Remember, I told us that we had equal lows here. It has been smashed last week. I told that that is going to happen. It has done that, traded into this FBG here. Into this FBG here. Did it fill it completely? They did fill it completely. Let's see. No, it didn't. Didn't fill it completely. And it traded to the mean threshold of that CB. And then this is where we are. It could fill it completely and still rally higher. It's still very fine. You have other block here, FBG here. So you could trade below, take out that low and still rally higher. That's still very much okay if it does that. Daily time frame, it just kept going lower gradually. So essentially, I feel that any movement lower, this is where we're targeting, and this will be the last line of defense for the bull, to send price higher. This area here, this FBG here. Let me mark it out and keep. Essentially, we're going to see price trade to that. If market decides to go bearishly, this is where we're expecting price to get to. Okay, so we'll look at it next analysis day to see if it traded there or if it was rather heavy. Okay, to go higher. That's about that. Let's go to USD CHF Sweezy. So it broke below that weekly CB, BC rather. I think that's BC. Let's go to. Yeah, it broke below that, traded below the mean threshold of this other block. So this low essentially will be taken out, and that will be about that. It takes out that low. Same thing with dollar index. We take out that low before we start seeing a bullish movement to the upside. That's what I'm expecting on Sweezy. So it was bearish to the downside. Monday, Tuesday, Wednesday, we had consolidation. Then Thursday, broke lower. Friday, same thing. So we want to see it go lower, take out that low, as long as dollar remains bearish to take out that low as well. Once dollar takes out that low, this also will take out this low, and then we want to see market rally to the upside. The next one is our indices. I told us that indices has been consolidating. Normally, when dollar is going down, indices should rally up, but because of new government is in power, different policies being made and all that, so people are indecisive to want to invest in the US market. That's why we are seeing what we are seeing in the indices. But technically speaking, it has gotten to a discredited all-time high, and these are full of liquidities showing relatively equal high. So this retracement is needed technically. It has taken out this low. It could go deeper into this other block, and then we'll see a spike higher, clearing this buy-side liquidity. That's what I'm looking at for the indices. Same thing here. It's taken out that low. We outlined. This has not taken out that low, so we have tracking correlation. but essentially it's going to do that because the US 30 seems to be the stubborn pair as compared to US 500 and US 100. US 30 likes to be stubborn, but later on goes aggressively to the direction of other ones. So perhaps this week we might see a rally lower, taking out this equal low straight to this other block here on weekly time frame before we see any movement to the upside. Gold, what happened to gold? Yes, indecisive as well. Gold was indecisive, traded within the range of 2 weeks candle, just traded within that range. So it was an inside week for the gold. Daily time frame, we can see how we just did last week. This was Monday, Tuesday, Wednesday, Thursday to Friday, nothing significant. The significant move were made Monday and Tuesday, so nothing for gold. So what am I looking at? This high here has not been traded to, so I want to see it trade lower, take out this low, trade to this old high here, and that will essentially make dollar to rally higher. That will essentially make dollar to rally higher. The high on this candle is at 2,956. I wanted to see 3,000 printed, but it didn't give us that. So if it consolidates here, this week, and then dollar starts to rally, it will force this asset to decline aggressively. It breaks below this old high. We have this low here, this pool of liquidity here, and we have a lot of downside objective for the gold because gold has been significantly bullish for more than a year. Since 2023, October has been bullish till right now. No form of correction has been taken. It has not taken any sell side liquidity. It's been bullish and bullish. For instance, people that were buying from here, if they adjusted their stop loss here, this didn't take them out because it didn't take out this low. It rallied higher, traded than that low that has not been broken. This low also has not been broken. This one has not been broken. These ones have not been broken. So you can see that we have a lot of sell side liquidities resting below, all these internal range liquidities here. And the moment that dollar starts to rally, it's going to give ample time for this to do some form of correction on the gold. Okay, that is what I am looking at. So we can see after I broke this high here, it came up one more time. I think took out that high, and then it declined, took out this low before we started rallying higher. So I want to see it break the low, trade back to this old high inside this FVG here before we see another spike higher. That's on the premise that dollar is going to rally to the upside. Bitcoin has been declining gradually because it got to a point where I think it printed 110,000. Fell short of it, 109,356. That was the high it made, and it has aggressively traded to the downside. With the new policy, I think I heard that Donald Trump wants to pass an executive order or a bill that will make American government to reserve Bitcoin, something like that. I'm not very clear on that story, but I've not given an in-depth study on that story. So, but I think it's going to give, from what I'm perceiving, it's going to give Bitcoin momentum to rally to the upside. So this correction is needed. Trade to this old high inefficiency here before a rally higher. I want to see a new high created before the end of April. I think we should create a new high. Let's see. That is if this low is left intact. Okay. So that's about that for analysis for week 10. We expect the dollar take out this low and then rally higher. We expect Euro USD to maybe stay consolidated or take out this high and then decline. We expect our cable to consolidate here before it declines going lower. We expect Aussie to decline from here. We expect NZD to decline from here. We expect USD CAD to start rallying. We expect USD JPY maybe trade to this area before it starts to rally. We expect USD CHF to take out this low before it starts to rally. We expect our indices to essentially trade to this. I want to see trade to this bullish order block. That's what I want to see it do. It should go one more time lower. That's what I want to see you do. Okay. And then gold, we expect gold to start declining. Immediately dollar starts to rally, gold should decline. So that's analysis for 10. I wish you all the best. I want to encourage you to be very careful with your risk management. Do not over risk. Do not increase your leverage. You are not in an environment that is trending at the moment. Market is not symmetrical across board. A lot of inconsistencies right now in the market because of the US policy and other things that are happening in the Middle East. So be careful with your risk. Be careful with trading this period. I wish you all the best, and I'll see you next weekend for another episode. Good night.